Thank you very much for joining us. And of course, you have all met now Tom Jenkins. And I was going to make the joke about the skirt. Okay? So, because I did see
Ginny
him in
was there.
full regalia. And it
You
was
look better in a skirt
pretty
than I do.
awesome. Debatable. Richard Black. Richard Black, I like to call Richard the consummate VC. Richard Black is a partner and founder of Walsingham Growth Partners and a seasoned venture capitalist with many prior years of experience in senior roles at Helix Investments and RBC Partners. And I know firsthand in that Richard was a VC with a startup that I was with some years ago in Markham. And I bet you wondered what happened there, so I can tell you over a glass of beer later on. Karamdeep Nijjar, I like to call you the strategist. So a digital technology expert disguised as a VC. He is a partner with iNovia Capital, a Quebec-based VC firm, investing, I believe, quite a bit in the Waterloo area.
Absolutely.
Perhaps even more than anywhere else. So we'd like to hear the story about that as well. His focus is on software, digital media, and e-commerce, and he works closely with both companies and investees to evaluate and identify growth opportunities. Prior to that, Karamdeep, as I said, was a technical systems analyst with Royal Bank of Canada, and spent a little time in California as well.
I did.
Yeah, in Sunnyvale. And a UW computer science grad, yay, and an MBA from that other school. Ivy, right. Haroon Mirza. I like to call Haroon the switch hitter. Haroon was the co-founder. He's wondering where on earth this is going. He's the co-founder and CEO of Cognovision, an award-winning retail analytics provider. And for those of you who aren't familiar, this is all in the anonymous viewer analytics area, AVA. I like to call it professional creeping. Cognovision was named Canada's most innovative company in 2009 and was acquired by Intel. So Haroon sold out to Intel in September 2010. And as part of that deal, Haroon became director of BD for AVA. For Intel, covering the Americas, EMEA, and China. And now, as the first ever, I understand, entrepreneur in residence at OMERS Ventures, Haroon has come full circle as the guy, and this is a startup alert, so all of you who have startups, alert to this individual, responsible for the identification and execution of investment opportunities in the tech, media, and telecommunications sectors. Carleton BCom, and Harvard PLD, which is another word, I think, for an exec MBA, that kind of thing. He had me at Harvard, I'm just saying. So not bad for a boy that started in chocolate bars. So, and Tom, is, as I said, you've now met. So I'd like to give each one of our panelists just a couple of minutes, two, actually, each, to state their key thoughts on why don't Canadians build strong brands. Richard, do you want to start us off?
Sure. I'm not sure where to start with me as a brand, as being a person doing 3 of those flippers that you started off chatting about originally. And obviously, Tom knows this, and you know this, Ginny. When we talk about branding at both your companies you're at, I was usually the one that said if you're talking about branding, there was too many people in marketing. Usually was my discussion on the topic. I think the focus would be less on brand and really just about building the company longer term. And how do you have that large, longer-term successful company? It's challenging. Doing startups in Canada is hard. There's no doubt about that. As you talked about before, trying to have your teams grow here, your management team is finding the ones with success. To finding the capital to start and to grow the business, and also having those capital providers, whether it be VCs or private people, to hold on long enough. When in the case of it's 20 years since we looked at OpenText, a long time. You have to have a long, patient, large shareholder to make it work. If you look at the top 100 brands in the world, there's only one Canadian on that is Thomson Reuters. You could make an argument that it's there because you have the Thompson family who's been willing to support it for this long. And then, the other last point I would make is, the question is, does the capital structure and the tax structure in this country allow people to hold shares for a long period of time? Many cases, management and entrepreneurs, they want to be paid well over time. In most cases, paid less in Canada than the US. The way for them to increase and buy other assets they want is they have to sell stock. If the founders and management have to sell their stock to maintain a lifestyle or have other things, it's very hard to keep the company here and growing.
Very interesting. Thanks so much. And Karamdeep, can we ask you to comment? And I must tell you, Karamdeep's struggling with a bit of a cold, so if you hear a cough or two.
Sorry about that.
No.
I think one interesting element of it is just having role models in the industry who have built successful brands. And like I grew up here in Kitchener, and so I've been following OpenText since I was a kid, and the same thing with RIM. And I would drive to school every day at Waterloo, and the RIM buildings were right there. And when you start to think of what you can accomplish as an entrepreneur, you don't put it in the scope of, I can build this $20, $30 million company and flip it. You're driving past RIM and you're saying like, well, look, if those guys can build multi-billion-dollar companies, maybe I can do that as well. And I think we don't do enough as a country to promote those entrepreneurial success stories and hold them up as examples of what, this type of global ambition, we should have as, investors, as entrepreneurs, as employees. And I think that's a definite failing, right? If you go to Silicon Valley, everybody knows, the backstories behind Google and Facebook. There's even like motion pictures on it. I would argue, the majority of us here in the audience, we don't know the backstory of OpenText and how, it was spun out of Waterloo and the struggles and the successes they've had over the years. So I think a big element ultimately will be, on that side of things, highlighting those successes and hoping people follow in those footsteps.
And telling those stories.
Absolutely.
Thank you so much. Haroon.
I think so there's a number of areas. So one would be, so here's, I think, what you need to focus on to succeed. So one would be the fundamentals. Make sure you're solving a real problem, have a sustainable competitive advantage, be in a large and growing market. Some of those core fundamentals. And surprisingly, you'll see, at the startup phase, there's too many technologies looking for a solution, right? Next, I think, would be finding your narrative. So what I mean by that is explaining your value proposition in such a way where a customer will actually understand what it is you do. And I think you do that by speaking the customer's language. Too many times companies will have some sort of a solution to some sort of a problem, but nobody understands exactly what it is they do because they didn't find their narrative, I think, effectively. Then there's also, I love kind of the point on brand association. I mean, leverage that. Leverage your customers, your partners, your investors, for sure. And then I also kind of agree with the whole notion of be a thought leader. It's actually not all that difficult today. I mean, there are cases of folks starting with blogging and then moving on to becoming published on Harvard Business Review or Forbes or Fortune within a year because they were able to start building their reputation with writing blog posts and slowly kind of moving on up to that. So kind of doing those things effectively, I think, definitely helps with building that brand.
Excellent. Thanks so much. Tom, do you want to?
Well, I've spent a lot of time studying this across the country, and I can absolutely report to everybody in this room, it is not something that's in the water or DNA or something like that. I find Canadian entrepreneurs, whether it comes to branding or other business decisions, are very good, top-notch, best in the world. They're simply playing the cards dealt to them. And as Richard Black had said, you may, if we fix on branding and the lack of, say, a long-term sort of thesis, if you will, that is borne out by the numbers. The OECD shows that we for the past decade, we rank number 1, number 2 in creating companies, but as they start to hit 20 through 50 million, then we drop off because they're selling out. They're either selling out to Europeans or the US, et cetera. And a lot of it is to do with what Richard talked about, in that if you want to build a fundamental brand, it does take quite a period of time. And we can all pick out unique examples of where you do a Super Bowl ad and all of a sudden you're a brand, but the reality is there are no overnight success stories. And that I hope, if it's something that causes further debate amongst this group and within civil society, that we go to the sort of the real sort of upstream reason why, and ask the question about, well, what is it about the way we're structuring reward systems, et cetera? I know from talking with Jim Balsam and Michael Ezerides over the years, and some of the other entrepreneurs in town that have been running companies for a long time, we would look at each other sometimes and say, it's like playing Texas Hold'em and we're doubling down every year. And you have to sort of have a piece missing from your brain. But we wanted to do that. We weren't motivated in any other way. And as Richard had mentioned, we were missing part of that gene that says, well, be cautious and, you know, cash out and what have you, because we did it because we loved what we were doing. But if we want to have a long-term system in the country that builds brands and conveys long-term, then we really do have to question some of the things Richard mentioned.
Right on. Richard, you've been referred to a lot by, obviously been involved a lot with Tom over the years. Is brand important to a venture capitalist?
It's worthwhile to say, by the way, that when Richard was 11 years old, he gave me the first $1 million at OpenText as a venture capitalist. So, and I think it was maybe the first or second, I defer to Ian McPhee on this, but I think it was the first or second private venture capital firm to come to Waterloo 25 years ago. So that's the connection. We hadn't mentioned
Fabulous.
It's a bit over the 11, and my gray hair is probably from Tom, from a lot of it, actually.
Well,
The one thing we come back is not just the companies and the investors and everything else, but it's the management team really has to understand when they say the word brand, what does that mean? There was a software company that was involved with, which was not small, it was 80+ million a few years back, where the CEO in their users conference invites their largest customer to come and give a presentation what it was like. The customer said, puts up on a slideshow, puts up a lovely picture of heaven and said, this is what the management team described the company and the product to be and what it delivers. What we actually received, the next slide, was a picture of hell and said it was the divine comedy. How a management team can get that so wrong with their largest customer is a shock. So you want to talk about bad branding, that's probably the worst example I've ever seen. Obviously, there's much easier ways to get it simpler. What's your brand for your new customers? What's the brand for the existing customers? What do your employees think your brand are? And as Tom mentioned, what do your shareholders think your brand is? You sort of have to get all those right. It's not just one large sort of consumer brand.
Karamdeep, I know that in dealing a lot with U.S. individuals, they often look at Canadians as a little on the timid side and a little on the introverted side, if you like. Do you think that Canadians need to work on a more aggressive mindset in order, with regard to both the innovation, I guess, and the actions thereafter?
I don't necessarily think it's a Canadian thing. If it was a Canadian thing, we wouldn't have these, huge mining companies in the world, right? And all these other sectors where Canadians are building global brands. So I don't think you can point to it as being part of the national mentality here, that we're less aggressive than in the States. Like, even to use potentially a poor example, someone like Justin Bieber is the biggest pop star in the world. He's from Stratford, Ontario. I don't think anyone's gonna talk about him or someone like Drake or whatever as being less aggressive than their southern counterparts. I think where we do tend to fail is when we're building these companies and organizations, it's not necessarily the leadership is less aggressive, it's when you're talking about building brands and investing in marketing. I think we do tend to underinvest in those areas. And I think there's a variety of structural reasons around that, which Richard alluded to. Like Shred, for example, you don't get Shred for hiring a bunch of marketers. But ultimately, you're investing in a product roadmap. Why aren't you investing in a brand roadmap at the same time? So I think over time that will change, but I think right now that's kind of the knock I would say is actually, makes sense for Canadian companies as opposed to pointing to entrepreneurs themselves as being less aggressive in any way.
Well, you're obviously seeing something that you like here in the Waterloo area.
Abs-
So what is that?
I was working on a blog post about this last week, and I can pinpoint the day everything changed here in Waterloo, at least for this generation of entrepreneurs. And that was back when Ted Livingston raised a large Series A for Kick. and he raised $8 million from the top venture firms in the entire world. And if you go back, 5 years previous to that, there was almost like this lost generation of companies and entrepreneurs here, where you had built some companies, flipped them relatively quickly, but no one had had that kind of big splashy fundraise and had gotten all this press and whatnot. And if you look at TED and that cohort of entrepreneurs, those are guys like Bufferbox, Vidyard, Thalmic Labs, Top Hat. All these guys turned around and said, look, like Ted's a smart guy. I'm just as smart as Ted. If he can go out and do that, why can't I? And I really, really feel the mentality kind of changed overnight that day. And if you look at the success some of these startups have had it over the last, 3 years since that announcement was originally made, it's a testament to that and kind of this grander ambition that I think exists here amongst entrepreneurs.
That's awesome. Haroon, you developed, you sold out, and now you're looking for young firms to invest in, and then tell them to sell out, maybe. So you've lived this situation from all sides. What do you see ahead for Canada and the area particularly?
So I think from a venture capital standpoint, if we take a look at OMERS Ventures, where we consider ourselves to be very kind of long-term life cycle investors. So there isn't actually an urgency to sell. So I would say that environment has definitely started to evolve and change in Canada. If you take a look at some great kind of global brands now, we've got Shopify with over 90,000 customers all around the world. You've got Wattpad with 25 million kind of users on their platform, Desire to Learn, Hootsuite. These are all, I think, now examples of companies that have built global brands that now have access to investment dollars, even right here in Canada, where there's no pressure to sell. Like, go for it. We're going to be here with you along the way for every kind of round as you grow. And then, you kind of see where it goes. You're going to have an opportunity for some companies to go public. You're going to have acquisition opportunities, but much later kind of down the line. So I think the environment has definitely changed. We're seeing a lot of U.S. investors coming into the country, and now we're starting to see, OMERS Ventures is testament to this. We're a $400 million fund now. I'm investing in some of the biggest Canadian success stories to date and hoping to be in it for the long haul.
Very helpful. So, Tom.
Well, first of all, I remember those discussions about TED, and they didn't say they were as smart as him. They said they were smarter. And of course, TED would laugh over that. And it's true what you said, that there was a generational change here when that happened. And I think another generational change as it comes to brand is you can't forget the macro environment. In the last 5 years, Canada as a brand has done fantastic on the global stage. You cannot go, I was just with the Prime Minister in Europe. We absolutely are a brand of respect, much more than at any time in my career. And the group that's here in the next generation of TED, they have an opportunity to build on that brand in a way that the rest of us couldn't. So we'll have to see. And I think the other thing about brand strategies, I think we have to recognize, for many of you in the audience, and certainly for the venture capital brethren, selling out is a valid strategy in building your brand around a particular competitor. The challenge in Canada is perhaps we're doing it too much. It's not so much that it shouldn't be the majority strategy of brand development, but that what's missing is we're missing that sort of one end of the curve, if you will, in our distribution, that we don't seem to be building the brand. But the bulk of the activity.
You must have had big offers through the development of OpenText. What stopped you from selling out?
Now this is just me, right? And my management team, board. We had a strategy in the first 10 years, and I know for the entrepreneurs here, it'll really sound sort of surprising. We actually stayed below the radar. We actually went out of our way to not brand ourselves too closely with our competitors and our partners because we weren't big enough. Savis Chamberlain many years ago taught me an interesting story. He said, Tom, you got to think of your company as a tree. If you grow your tree up, the big winds are going to start to blow. You better make sure you've got strong roots because otherwise it'll knock your tree over. And I thought that was a very interesting metaphor that we actually consciously avoided companies like Microsoft or Oracle in the early days, because quite frankly, we didn't want them to steal our engineers, which they ended up doing later anyway. But it's sort of a reverse sort of idea, perhaps, for some of you in the audience, that it's actually smart to stay below the radar for a while. Because remember that ice cream cone melting in the middle of July, the longer you can delay the bigger players that already have that market position from being aware of what you're doing, that actually gives you more of a runway. And by the way, the quid pro quo is the longer you wait, the more valuable you do get.
Yeah.
Even though as an entrepreneur you think, oh my goodness, somebody just offered me $10 million for my $100,000 revenue company. If you wait and you keep executing, but that's the Texas Hold'em sort of analogy, you will grow much more
And
value.
you can wait too long.
Yeah.
On that,
Please.
I would say often like the successes we know about, at least up here, like we talk about Facebook, like Mark Zuckerberg was a first-time entrepreneur. But usually these larger companies are run by people who've had 2 or 3 smaller exits.
Interesting.
Like Reid Hoffman at LinkedIn, I think that was his 3rd startup. Mark Benioff, when he founded Salesforce, he did it with $6 million of personal capital. Like I don't know a lot of entrepreneurs around here with $6 million of personal capital they can sink into a startup. So I think it's healthy for the ecosystem as well to have some of these earlier exits, as long as those entrepreneurs then are coming back into the ecosystem down the road, and in the meantime, investing in other companies and building their networks, and understanding, what it's going to take to then take their next company to a higher level.
Another comment as well on staying stealth. There has been a strategy for early stage companies when they raise their seed rounds or their Series A rounds. They won't even do any PR. Because the idea being that if you do PR, it validates that they might be onto something, and then it can actually help potential competitors. So instead, raise your round, go build a great company, and maybe mention it a year later or 18 months later once you've hit some other milestone. Because then you've actually got this competitive advantage. Whereas the signaling risk, and it's an interesting strategy of kind of coming in early and doing PR too early, could be that you just actually help found more competitors when you never needed to in the first place. So very much aligned with that point.
There's a need to be sophisticated about your brand development by audience specifically. If you muck that up, you could cross over and really destroy a lot of value.
Richard, Tom talked about Canadians are really clever and they end up having to play the cards that they're dealt. One of the cards that we're dealt is that we have a fair amount of government protection around some of our industries. Did you want to comment on that and how that's really held VCs back or discouraged?
Was Minister Goodyear still here?
He may have left.
It's most of the Canadian industry is protected in some form or fashion. Probably technology is the only industry in the country that's not. So people in the technology business have to. There isn't a large home market, as people have talked about before. So you have to grow elsewhere, and in many cases not the U.S., whether Europe or Asia. But that's hard with limited resources. If you are a bank, you have an oligopoly here. You have a very large protected market. There isn't that chance or need to learn to compete that technology companies have. It's a tough thing in this country. If you're looking for management teams, if you're trying to bring in a senior experienced person from another industry, if they have never really competed before in real tough competition, it's impossible to throw them in a situation and tell them you got to increase revenue by 200% and you're going to have 1/100th of the resources you used to have.
We have actually a question on our Twitterverse that just disappeared, of course, the minute that I started to talk about it. But it talks about potential strategies for rebranding as well. And how difficult is it to rebrand? Do you want to try that, Haroon?
I think one of the most interesting ones was what became Accenture, right? That's an example of a kind of much kind of larger company doing it. But I think depending on the scale of your organization and depending on kind of what it is that you're facing and what's causing you to rebrand, the level of difficulty, level of funding and resources to do it could be very tough. But I think there's different types of approaches that you can take. I mean, there's the whole notion of, which I've seen, well, companies will start to kind of create a brand and create a product, and then try to build an entire new brand around that and start to actually distance themselves from what that product is, which allows them to kind of, I guess it's a strategy to rebrand, but you're creating a new brand for kind of your product. And it kind of gives you time to rebuild some sort of a track record. But I think the answer is it depends. It depends on how early you are, it depends on what type of legacy you've created, and depends on what the motivation would be for you to rebrand. Because if you're dealing with some immensely negative pressures, I think it's possible, but it takes a lot of time, energy, and resources.
Karandeep, what can a company do, a startup company, to encourage a longer term view amongst its investors?
I think a lot of it ends up being, how do the founders align with their investors that they take on in the first place? So, if you don't do the research on your investors, where are they in their fund life cycle? What scope of exits have they had before? How much do they believe and trust you as an operator? It's going to be hard for you, 5 years down the road to then say, oh, I want to keep going, when they're misaligned on all those points. So I would say that's the very first thing you can do. The second thing to do is to demonstrate the fact that you as a CEO are willing to make long-term investments in the future products of the company and kind of the people that you're bringing aboard. I had a friend down here last week from Hootsuite. Hootsuite is a large company, it's in Vancouver. I'm sure it's worth probably north of $1 billion at this point. The reason they were in Waterloo and in Toronto is they're looking to find teams that they can acquire to go out and cannibalize their existing product sets. And they're looking for people to build things that they know they can't internally. So when you have a management team which is taking steps like that, which isn't about the next 12 months, but about the next 5 years, I think the investors around the table turn around and look at each other and say, look, we have a horse that we can really bet on here.
Anybody else want to dive in on that one?
Well, on rebranding, the issue there is, are you rebranding a product or are you rebranding the entire corporation? Rebranding can be a very fatal experience if you don't do it properly. The best way to think of rebranding is, I've lived it several times, is it cheaper to build a brand new house, or is it cheaper to tear down the original house and then build a new one or refit it and what have you? And when you do the numbers, most of the time it's cheaper to just go to Greenfield and build the house again. So if you're in a rebranding of the corporation, you might want to question that. If you're rebranding a product, then yeah, you can do that because you use the corporate brand. And that's what I was trying to say before. If you're a tech company and you have a long vision, it costs you more money at the beginning to establish 2 brands, but ultimately it's safer. Because if your one core product brand gets wiped out in the market, and that's your corporate brand as well, boy, that's a tough situation, and we can think of examples of that. It's pretty hard.
Tom, in your presentation, you talked about it. I'm not going to get the words quite right, but it's difficult to launch a brand from Canada, a lot easier to do it from New York or California. Can you talk to me a little bit about that and what we need to do to make this a little bit more of a happening place?
So I mentioned that as a word of caution to the entrepreneurs here, and I was really referring to a retail consumer brand. Now, the internet has flattened a lot of this. You can do a lot more in the Twitterverse, et cetera, and you can be from anywhere. Doesn't matter. But there is a reason why companies aggregate to Manhattan or they aggregate to San Francisco. Because a lot of this, although it occurs in the internet, and many of us are familiar with the methods, there's still a lot of body contact. Why does Communitech exist? Why does Velocity exist? Because there still is, as Ian Klugman likes to say, it's a contact sport. So that's what I was referring to, is that the media centers of the world are where, if we're doing industrial, Canada is blessed with having virtually every sector of the world economy in this country in a microcosm. So if you wanted to do the oil and gas example, or you wanted to do the cities example, you can actually start from here and then expand virtually with your brand development. So we are uniquely, I would say, on the industrial side, in a wonderful situation to build brand. My point was really on the consumer retail.
I think
Probably
we
gonna
have
like it.
about 1 minute left, and there's a great question that's come in from the Twitterverse that's saying essentially that building brand costs big dollars, and I know I have seen that. So top 3 ways they're looking for how can startups build brand on a budget? Can I get just a thought from each one of you? Starting with you, Richard?
You start at the other end. I'm the one who just sits there and does nothing. Tom?
All right, we'll start with me. Brand association,
Okay.
absolutely the fastest way. Many of you in the audience have already seen in the previous talk, very simple ways you can do it, doesn't cost you any money. It does require organizing ahead of time, because as Richard said, be careful what you brand associate with, that you've researched it, but it's so simple, it's the most cost effective.
Excellent. Haroon?
I would say, yeah, selective brand association and thought leadership.
I was going to go with content marketing / thought leadership, as consistently across our portfolio companies, if you break down different marketing spend and which one generates the highest ROI, thought leadership and content marketing are just absolutely off the charts.
Excellent. Do you want to wrap that up?
Sure,
Richard?
just if you have a compelling reason why your customers are buying your product, hopefully you've got a handful of those customers that are willing to, shout from the rooftops and support you on that. Focus on those on the early days.
Thanks very much to all of you, and as a result of your efforts here in Canada, I can see a huge future going forward. It certainly looks like we've come around a corner. Thank you very much for being with us today.
Thanks, Ginny.
Thank you.